Hello, this is Dr. Annette Moultrie, and welcome to Managerial Accounting. We will be covering several chapters in managerial accounting, so please watch out for our videos.
But before we proceed with the video, I need you to click on the subscribe button. Click on the thumbs up button below. Also, click on the notification bell so you'll be notified of upcoming videos.
This is part 2 of job order costing. Part 2. We will begin with learning objective 2.4, record the completion and sales of finished goods. Once you know how to accumulate, assign, and allocate the cost of direct materials, direct labor, and overhead to jobs, the process must be completed by accounting for the completion of jobs, accounting for the sale of jobs, and adjusting manufacturing overhead. Normally, journal entries would be made as each individual job is completed, but we are showing it as one summary journal entry, transaction number 9. The cost of goods manufactured is transferred from work in process inventory to finished goods inventory as jobs are completed and moved into the finished goods storage area. The cost of goods completed during 2026 is $644,600. So you see there's a debit to finished goods inventory and a credit to work in process inventory for the amounts of $644,600. Transactions number 10 and 11, it records $1.2 million of sales on account for jobs with a cost of $584,600. Smart Touch Learning records 2 entries, one for the sale and the other to recognize the cost of goods sold. So here you see there's a debit to accounts receivable and a credit to sales revenue for transaction number 10. And the $584,600 is the cost of goods sold, a debit and a credit to finished goods inventory for transaction number 11. As jobs are completed, their costs are transferred to finished goods inventory. We end the period with other jobs started but not finished, which are represented by the $27,000 ending balance in the work in process inventory account that you see here. We also have jobs completed and not sold, which are represented by the $60,000 ending balance of the finished goods inventory. The balance sheet work in process inventory will have a debit, which will be the cost incurred, the balance of the $80,000, transaction number 2. Then you have transaction number 3, transaction number 8. You'll also have a credit of the cost of goods manufactured. You have transaction 9, and you'll have that ending balance of $27,000. The credit amount of $644,600 is entered as a debit amount transaction for number 9, transaction number 9, in the finished goods inventory. The balance sheet will have the finished goods inventory. There will be a debit for the cost of goods manufactured, the balance of 0, for transaction number 9, $644,600. The income statement, which is the cost of goods sold, will have the transaction number 11, the $584,600. for the cost of goods sold. Remember, the journal entries are easier if you concentrate on the account you are transferring the cost into. The transfer is always to either an asset account or an expense account. Both accounts types are increased by debits. So the transfer to account is debited. Therefore, the transfer from account is credited. Learning objective 2.5, adjust for overallocated and underallocated overhead. So how is manufacturing overhead account adjusted? Because Smart Touch Learning allocates overhead to jobs using a predetermined overhead allocation rate based on estimates, an adjustment is required to manufacturing overhead at the end of the period. At the end of the accounting period, the underallocated and overallocated overhead is adjusted by closing the manufacturing overhead account. Overhead is underallocated when the company allocates less cost to jobs than the actual cost incurred. Overhead is overallocated when the company allocates more costs to jobs than actual costs incurred. Because Smart Touch Learning allocates overhead to jobs using a predetermined overhead allocation rate based on estimates, an adjustment is required to manufacturing overhead at the end of the period. The manufacturing overhead account needs to be adjusted because a debit of $15,400 exists. At the end of the accounting period, the underallocated and overallocated overhead is adjusted by closing the manufacturing overhead account. A credit to manufacturing overhead of $15,400 is required to bring the account balance to zero. The cost of goods sold expense is increased for the overhead costs not allocated previously. The manufacturing overhead account balance is now zero. And the cost of goods sold account reflects the actual cost of producing the product. Here you see the two T accounts, one for the manufacturing overhead and the other one for the cost of goods sold. If actual overhead costs were less than allocated overhead costs, manufacturing overhead is over allocated and the cost of goods sold is over cost. To close the manufacturing overhead, the manufacturing overhead account is increased with a debit, and the cost of goods sold account is decreased with a credit. Before the period, calculating the predetermined overhead allocation rate, the predetermined overhead allocation rate equals the total estimated overhead cost divided by the total estimated quantity of the overhead allocation base. And that's a lot to remember. But during the period allocating overhead, the allocated manufacturing overhead cost equals the predetermined overhead allocation rate times the actual quantity of the allocation base used by each job. At the end of the period, you adjust for over-allocated and under-allocated overhead. Learning objective 2.6, calculate cost of goods manufactured and cost of goods sold. As costs flow through the job order costing system, we go through a 4-step process of accumulating, assigning, allocating, and adjusting. Here you see in Exhibit 2-10, it lists all the journal entries illustrated in the chapter for the transactions 1 through 3. Transaction 1, you see raw materials inventory debited for $367K, accounts payable credited for $367. Purchase materials accumulated. Action 2, work in process inventory debited for $355K, manufacturing overhead debited for $17K, raw materials inventory credited for $372,000. Transaction number 3, work in process inventory debit of $169K, manufacturing overhead $28K, and wage payable credited for $197,000. Here you see the summary for transaction number 4, 5, and 6. Here you'll see the journal entries for transaction 7, 8, and 9. Transaction 10, 11, and 12. These are the journal entries. Exhibit M2-10, it shows that the manufacturing overhead account has a 0 balance after the adjusting entry. That was shown in the previous slide, okay? The materials from the raw materials inventory account were allocated to work in process inventory of $355,000 and to manufacturing overhead of $17,000 that you see here in transaction 2 for the T account, okay? The goods transferred from work in process inventory to finished goods inventory represents the goods completed during the period. The goods sold were removed from finished goods inventory and appears as a debit to cost of goods sold. So here you see the T accounts for raw materials inventory. Ending balance is $65,000. Work in process inventory, the ending balance is $27,000. Finished goods, ending balance is $60,000. And manufacturing overhead, you see that they had an unadjusted balance of $15,000, but it was closed out, so now it has an adjusted balance of 0. And the cost of goods sold has an adjusted balance of $600,000. Here at Exhibit 2-11 shows the schedule of cost of goods manufactured for Smart Touch Learning for 2026. The cost of goods manufactured total cost is $644,600. It is the same value shown as a debit in the finished goods inventory T account that you saw in the previous slide. Schedule of cost of goods manufactured for Smart Touch Learning for the year ended December 31st, 2026. Here, Exhibit 2-12, it shows the income statement for the same period, December 31st, 2026. Notice here on the income statement that the underallocated overhead is added to the cost of goods sold calculation, so that the cost of goods sold on the income statement, it matches the amount on the T account. If overhead had been over allocated, the adjusted amount would have been subtracted. For example, in Granite Construction Incorporated 2016 Sustainability Report, James H. Roberts, the president and CEO, he stated that we have invested in advanced technologies, including auditing and data management systems, to further minimize our environmental impacts and deliver high quality products. The company used data analysis to track the root cause of environmental incidents that led to citations, and they took corrective and preventative measures to reduce the number of citations. A decrease in environmental incidents can result in a decrease in costs and an increase in profits, while also having a positive effect on the communities where the projects are located. So for manufacturing companies, knowing the cost of production is vital to their success. Managers can use the job order costing system to accumulate large quantities of data, and the data can then be used in decision making. Learning objective 2-7. This is our final objective for this chapter. Calculate job costs for a service company. So how do service companies use a job order costing system? Service companies or firms, they have no inventory, but yet they still incur operating costs that need to be allocated to jobs. The hourly rate is found by taking the total salary paid to a particular employee for the year and dividing by available work hours per year. The predetermined overhead allocation rate is calculated using an allocation base such as direct labor hours. So the formula is the same as before, where you have estimated indirect costs divided by estimated direct labor hours, which will equal the predetermined overhead allocation rate. Now, this rate is used to apply indirect costs to each job based on the actual direct hours used on the job. Here in this example, Fox salary and benefits total $100,000 per year. Assuming that there's a 40-hour work week and 50 work weeks in each year, Fox has 2,000 hours available work hours per year. So Fox hourly pay rate is $100,000 divided by 2,000 hours equal $50 per hour. So Fox worked 14 hours for client 367. So the direct labor cost assigned to client 367 is 14 hours times $50 per hour. And that is equal to $700. This direct labor cost will be recorded on the job cost record for client 367. Founding partner Jacob Walsh wants to know the total cost of serving each client, not just the direct labor cost. The Walsh Associate also allocates indirect costs to individual jobs or clients, if you want to call it. The law firm develops a predetermined overhead allocation rate following the same approach that Smart Touch Learning used. The estimated indirect costs are shown here on this slide. So the following indirect costs are estimated for 2024. Office rent, office support staff, maintaining and updating law library for case research, advertisements, office supplies used. The total indirect cost estimated for 2024 is $300,000. Direct labor hours are used as the allocation base. Walsh attorneys will work an estimated 10,000 direct labor hours in 2024. So step one is to compute the predetermined overhead allocation rate. As you see here in this slide, you have $300,000 estimated indirect costs divided by the 10,000 direct labor hours, which equal to $30 per direct labor hour. Step two, you would allocate the indirect costs to the jobs. So here you have 14 direct labor hours times $30 per hour, which will be $420. Here on this slide, it shows the total cost assigned and allocated to client number 367. The total hourly rate for the company is $80, which is $50 per hour for direct labor plus $30 per hour for indirect costs. If a firm desires a profit equal to 75% of the firm's cost, then the price will be calculated as follows. Here you see a markup. Total cost times markup percentage. That's the $80 per hour times 75%, which will equal $60 per hour. And the price is the total cost plus markup. That's equal to $80 per hour plus $60 per hour equal $140 per hour. This is the end of part 2 of job order costing. The end of the chapter of job order costing.
Thank you for watching. And please, if you haven't already, please click the subscribe button below.